The final agreement out of the UN Climate Change Summit agrees to phase down coal. Plus, the housing market cools over the weekend, the truth about international travel, and why men in lycra are upset. It's Monday, the 15th of November, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Also today, stay listening for Sean's chat to Ben Gilbert from Jarden Australia about investing in retail stocks. But first, Sean, the COP26 United Nations Climate Change Summit in Glasgow is over, with countries agreeing to phase down, but not phase out, coal mining.
Yes, Michael, in the final hours of hammering out a communique, India and China, two of the world's biggest emitters from coal-fired power stations, pushed the change in wording. It was a slightly disappointing end to the biggest climate summit in at least 5 years. The summit reached agreement on many other significant issues, including how countries report their emissions and rules for global carbon markets. The Glasgow Accord commits the 197 parties to the Paris Agreement to accelerate efforts towards the phase down of unabated coal power and phase out of inefficient fossil fuel subsidies. It's the first time a COP agreement has included fossil fuels. That's quite a step forward. The agreement also commits countries to strengthen their 2030 emissions reduction targets by the end of next year and asks rich countries to double the money they give to developing countries to help them adapt. Now remember, Australia is one country under pressure to increase its 2030 target, though yesterday Energy Minister Angus Taylor pushed back on that.
Sean, there was a huge amount of pressure going into this summit to really deliver results. So the big question is, was COP26 a success?
Well, I'm going to squib on that. It depends pretty much who you ask. It was great that nations reached an agreement, but the divide between rich and developing nations over emissions remains. UN Secretary-General Antonio Guterres probably put it best when he said the final agreement reflects the interests, conditions, the contradictions, and the state of political will in the world today. The collective political will, he said, was not enough to overcome some deep contradictions. Having said that, nearly 40,000 people participated. Anyone that was listening now understands better the challenge of climate change. Including coal and fossil fuels in the final agreement for the first time is definitely a step forward. So too India's commitment to become carbon neutral by 2070, and rich countries have pledged to help poorer nations. But of course, change never comes fast enough, so there's plenty of arguments why COP26 was a disappointment. All in all, I think it was a pretty good effort, and it will make a difference.
Okay, so how did markets perform over the last few days?
The S&P ASX 200 had a strong end to last week, closing up 0.8% on Friday to 7,443 points, Michael. It's still down about 2.5% from its peak, notwithstanding overseas bourses are currently trading around record levels. Now on Friday, among the large caps, Cloud Accounting Group Xero jumped 3%, regaining some of its losses from earlier in the week. South32, REA and Coles Group all ended around 2% higher. The top performer, though, was Building Materials Group James Hardie. It was up more than 5%, and that followed its earnings update earlier in the week. It's up 50% over the past year, and it's now the 17th largest company on the bourse. Quite a resurrection for that company. The worst performer on Friday was Fisher & Paykel Healthcare, which dropped nearly 3%. Engineering Group Monadelphous was off 2.9%.
And what about overseas markets?
Wall Street rebounded over the weekend after some down trading sessions earlier in the week. By the close, it was just below where it had started last Monday, meaning the 5-week winning streak has come to an end. The strong inflation figures out of the US last week remain the dominant force in markets. There was a bit of interesting corporate news, though, over the weekend, and that was that healthcare giant Johnson & Johnson will split into two separate companies. It came just days after General Electric said it will split into 3 listed companies. I reckon there's almost a trend there now, Michael. The other one, Tesla's share price also continued to lose ground over the weekend. It's down about 10% over the past week. Switch over to Europe. Those markets were mixed. The Aussie dollar's a bit stronger. It's trading around 73.3 US cents as we head into the new week. Brent crude is off a bit, and a barrel of oil is worth a little over 82 US dollars. Gold was higher and is trading around 1,865 US dollars an ounce.
When Johnson & Johnson splits into 2 separate companies...
I know where this is going, Michael.
What are they going to be called?
1 and 2.
That's right. We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. What a difference a couple of weeks can make. There were reports of a bit of a shortage of buyers in the housing market over the weekend.
Incredible, isn't it? Yes, shortages of buyers in Sydney, Melbourne and Brisbane in particular. Now, new home listings in Sydney have jumped sharply, but the average number of registered bidders has dropped to 3, down from levels closer to 10 a few weeks back, according to a report in the Financial Review. The main reason has been a flood of new listings. There were 1,290 auctions in Sydney over the weekend. Now, that's the most since late March. And the clearance rate was down to 75%. Look, that's still not bad, but it's well below the level of early last month. In Melbourne, the clearance rate over the weekend was 74%, even though there was a jump in listings, but agents said fewer people were bidding at auctions and even fewer were attending open houses. In Brisbane, the clearance rate was down 5 percentage points to 80%. Nationally, the clearance rate was 75.5%. As I said, that's not a bad outcome, but certainly the heat just seems to have come out of the market just a touch.
Yeah, it appears that way. On the COVID front, it looks like children between the ages of 5 and 11 will have to wait until next year now for a COVID vaccine.
It does. Health Minister Greg Hunt said he expected medical regulators would decide in January whether 5 to 11-year-olds should be vaccinated against COVID-19. The Therapeutic Goods Administrator, that's a health regulator, said it was waiting for more data from the US. The US is the only country so far to have approved vaccinations for children. Now, overall, Michael, the vaccination rollout has definitely slowed in recent weeks, mostly because people who want to be vaccinated already have been. 94% of adults in New South Wales and 93% of adults in Victoria have received at least one dose. Queensland has just hit its 70% double dose target, and Premier Anastasia Palaszczuk is expected to announce changes to restrictions today. In terms of numbers, New South Wales recorded 196 new cases yesterday, Victoria recorded 905 and the ACT recorded 15. Certainly they're on the downward trend. That is good news.
Yeah, certainly is. Now, Sean, I know you will be very excited about this because it is a big week for the economy with Reserve Bank board minutes due for release tomorrow and wage figures out later in the week.
Yes, it is. And it's really about just how strong price pressures are in the economy and whether they're feeding through to what consumers are paying. There's plenty of data nowadays, but an interesting one from last week was the Westpac Card Tracker Index, which shows information on what's happening from card transactions processed by Westpac. It jumped sharply and it's back to its highest level since mid-April. Obviously, the reopenings are helping things along, and it does feel as if the economy is picking up pace. Yesterday, Federal Treasurer Josh Frydenberg was out saying jobs will come back as reopenings gather pace. All that's fine, but really investors are waiting to see what the Reserve Bank minutes say and what Governor Philip Lowe will say at an economist conference tomorrow. That'll tell us a lot about what the central bank's thinking and when interest rates will eventually start rising.
Now, Sean, we might all be getting very excited about international travel, but the reality of the situation is there is a long way to go to make up all the lost tourism over the past couple of years.
That's right. Bureau of Statistics figures show that total departures from Australia in September actually hit a record low of 30,330 trips. That's down nearly 7,000 from the previous month. Total arrivals fell more than 8,000 to less than 19,000. Now, provisional figures for October suggest things have picked up a bit. But as you say, Michael, we're all very excited about the rebound in travel, but it's just not happening yet. Take New Zealand as a really good example. It's our largest partner in terms of flows in and out of the country. In December 2019, there were 193,000 departures from Australia to New Zealand, 193,000. In September this year, there were 700. Again, a record low.
That's extraordinary.
In December 2019, there were 176,000 arrivals in Australia from New Zealand. In September this year, there were just 470. That's all according to the Bureau of Statistics. Flow that through to the travel companies, and you'd think their share prices should be pretty poor. But in fact, Flight Centre, Corporate Travel Management and Webjet are all up between 25 and 30%. Now, obviously, investors expect the pickup to come, but it certainly hasn't arrived yet.
Okay, Sean, what's making headlines in today's news media?
Well, a news poll in The Australian shows that the federal coalition has clawed back the margin between primary votes for the two major parties, now behind 38 to 37%. The gains were made at the expense of minor parties. On a two-party preferred basis, Labor now leads 53 to 47%, and the gap between the two leaders has narrowed to its tightest level since March 2020, with 46% of the survey respondents preferring Prime Minister Scott Morrison and 38% Labor's Anthony Albanese. The Australian's also reporting that Federal Health Minister Greg Hunt will review health advice which might allow him to remove the biosecurity ban on cruise liners. That, Michael, could allow vessels back in the country by Christmas. And the Financial Review is reporting that Telstra and data analytics group Quantium, which is owned by Woolworths, will do a deal to help accelerate the telco's use of artificial intelligence, particularly for Telstra customers in mining, agribusiness and logistics.
Running through some of the other stories around today, the chair of the ABC, Ita Buttrose, has slammed a Senate inquiry into the complaints handling procedure of the national broadcaster, saying it was a blatant attempt to usurp the role. The inquiry was announced late last week by Senator Andrew Bragg. Ms Buttrose has asked the Senate to terminate or suspend the inquiry until an ABC internal inquiry is complete.
Media group HT&E has agreed to buy Grant Broadcasters for $308 million, creating a national radio broadcast network. The new group will have about 58 stations across the country and 46 digital stations.
There are a couple of smaller deals around on Friday. Link's share price jumped 3.5% after it received an $86 million offer for its banking and credit management arm, and Zipco rose 3.7% on news that it's completed its acquisition of European buy now, pay later provider Twisto Payments.
Late last week, we got a bit of an insight into the types of things the Australian Prudential Regulation Authority could do if it steps in to cool the housing market. APRA has already asked banks to boost serviceability buffers, meaning if you take out a home loan, you'll need to be able to afford a loan 3 percentage points higher than what you're actually paying. But in a discussion paper, APRA talked about other options, such as placing rules around debt-to-income ratios and loan-to-valuation ratios. It also considered changes for loans to investors and for interest-only loans.
The Foreign Investment Review Board has said it has no objection to Canadian giant Brookfield buying AusNet, the Victorian grid company. Brookfield has offered $10.2 billion for the company, and while it hasn't got there yet, FIRB approval is a big step.
And finally, Michael, Adore Beauty held its annual general meeting on Friday and said it had recorded a strong start to the current financial year. Revenue in the 3 months to September was up 25% on a year earlier. That's good news for all the shareholders of Adore.
Yeah, it certainly is. And the founder of Adore Beauty, Kate Morris, spoke to Fear and Greed some time ago. Amazing startup story, that one, because it's gone on to be a huge success.
Yeah, it's a great story, as you say.
What's the key overseas news this morning, Sean?
Well, Germany is in the grip of its fourth coronavirus wave, recording more than 50,000 new cases in 24 hours for the first time. Death rates have also been rising. Notably, Germany has a relatively low vaccination rate of just over 67%. Airbus said that airlines, leasing companies and cargo carriers will purchase more than 39,000 new passenger and freighter aircraft by 2040, 39,000 in the next 20 years.
Wow.
That's as companies demand lower emissions planes. Over the weekend, the European plane maker said the COVID pandemic had stunted sales growth, but expected it would return with a bang, thanks to all the awareness around climate change. By the middle of this decade, Airbus expects to be producing as many as 75 planes per month from its A320 family of jets. And finally, the supply chain crisis is now, Michael, getting very, very serious. Bike parts, pedals, carbon frames, whole bikes, in fact, are in short supply globally. In fact, some parts have 12 to 18-month lead times, according to the Financial Times. Now, bike sales globally have soared during the pandemic as people have avoided public transport. It is a global phenomenon. Of course, that's added to the parts shortage. The men in lycra are up in arms.
Yeah, well done. Very nicely said. Up next, Sean, is the Daily Interview, and today you're speaking to Ben Gilbert from Jarden Australia.
Yes, we talked all about retail stocks in particular. He told us what he liked and what he didn't like. If you're an investor, listen.
Yeah, it's a really interesting one, that one. That is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Also, while you're there, make sure you check out The Week Ahead with Stephen Koukoulas, because there's a fair bit coming up this week, Sean.
There sure is. No one likes the economy more than Stephen, and this week he is just as enthusiastic as always.
Yeah, that's certainly right. And also, while you're there, leave a bit of time to have a listen to the Sunday edition, which is where we take a bit of a lighter look at business. And in particular, the highlight for me this weekend, Sean, was you telling the story of the time that you met Warren Buffett. I'm not going to give any more away than that, but your run-in with the legendary investor himself is definitely worth a listen. That is, of course, it is. You'll find that one in the podcast playlist or at fearandgreed.com.au, where you can also sign up for our free daily newsletter. Thank you very much, Sean.
Thank you, Michael. Enjoy your day.
It's Monday, the 15th of November, 2021. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook, and at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.